Friends, have you ever noticed that the moment the market opens, everything suddenly feels fast and uncertain? Exactly at 9:15 in the morning, chaos breaks out everywhere. Candles start moving up and down so rapidly that only one question keeps spinning in your mind. Should I enter right now? What if I miss the move? This is the exact moment where most new traders slip. They believe that as soon as the market opens, they must take action immediately. But the truth is, the opening time is the most dangerous part of the day. Mark Douglas said it perfectly. To make money in the market, identify the right opportunity. Do not try to catch every opportunity. If you want to know which time after the market opens is actually best for you, when you should enter, and when you should simply watch, then this video is for you. Because in the next few minutes, I'm going to explain step by step the exact things professional traders follow. And trust me, by the end of this video, you'll be completely clear on how to turn the market open into your strength, not your biggest weakness. So without wasting time, let's begin and understand what the real base time of market open trading actually is. When the bell rings at 9:15, many traders feel their hearts start pounding. Red and green candles dance so fast on the screen that the mind becomes confused. Where should I enter? Will it go up or down? This is where most people get trapped. The truth is, market opening is not a single moment. It's a process. Overnight news, global market impact, currency fluctuations, and even overnight positions all combine to make the first few minutes completely unpredictable. You might wonder why volatility is so high. The simple answer is that institutional investors FIs and big players are adjusting their positions. Meanwhile, retail traders act emotionally, rush into trades, and end up taking losses. Mark Douglas shared a deep insight. If you fear uncertainty, you will be forced to repeat the same mistakes again and again. That means if you make the first 15 minutes your trading time without thinking, that fear and confusion will continuously push you into bad decisions. Understand one important thing. You should see the market open like a battlefield. Dust in the air, noise everywhere, but the real picture is not clear yet. In the same way, the movement you see from 90:15 onward is not real direction, it's just noise. And a smart trader's job is to filter that noise. Remember, trading is not only a game of strategy, it's a game of psychology. If you get trapped in greed or fear the moment the opening bell rings, then you've become the perfect prey for professional traders. They know exactly how retail traders react in a hurry, and they use the psychology to set traps. That's why your first and most important job during market open is simple. Observe only, do not react. Carefully watch how the market behaves around the previous day's closing levels. Notice where price pauses near support and resistance. Watch where volume is building. These small clues later give you the power to make correct decisions. Mark Douglas said something very precise. The consistency you're looking for is not in the market, it's in your mind. The market will never be stable, but if your thinking and discipline become strong, your results will automatically change. Those first few minutes are like a test. If you stay patient and only observe, the market will start explaining itself to you. But if you jump in without understanding, the market will teach you a painful lesson very quickly. When you calmly watch the early noise and control yourself, the market slowly starts revealing its true picture. From 90:15 to around 90:30, most of the movement is an illusion. Candles jump rapidly up and down. But once early buyers and sellers calm down, the real demand and supply balance begins to appear. This is where the difference between a disciplined trader and a beginner becomes clear. Beginners are still confused, wondering if the market will go up or down. A disciplined trader quietly watches where stability is forming. Think of the market like a crowded store. When the doors open, everyone rushes in. There's pushing and chaos. But after a while, the crowd settles, and only then do you see who is moving in which direction. The same thing happens on the chart. After the first 15 minutes, price action starts becoming clear, and the trend slowly takes shape. Mark Douglas said, "Don't expect the market to move according to your prediction. Instead, make yourself capable of understanding whatever the market does. Your job is not to force an entry. Your job is to recognize the right entry." So how do you recognize the right entry? You must look at two things: direction and strength. Direction means where the market is leaning. Strength means how much volume and power supports that move. Usually, between 90, 30, and 100, these things start becoming clear. If you watch the chart closely during this time, you can tell whether buyers or sellers are in control. But the most important thing here is patience. Many traders believe that if they miss the first 15 or 20 minutes, the opportunity is gone. This belief is their biggest mistake. The market gives opportunities every day, but your capital is limited. Mark Douglas said it clearly. Your real enemy is not the market, it's your emotions. These emotions, this impatience, push you to enter too early during the open. That's why your greatest weapon during the opening minutes is calm observation and discipline. The more you observe, the clearer the market becomes. And only when direction and strength are both visible does taking a trade make sense. Later, When the early chaos fades and the market starts showing real structure, the biggest question appears: when should I enter? This is where most traders stumble. They see small movement and jump in. But the truth is, not every movement is your opportunity. The market moves in two ways: random fluctuations and real moves. Random movement traps you. Real movement pays you. The difference is simple. Random moves die quickly and lack strength. Real moves come with volume, participation, and momentum. Mark Douglas explained that trading is not about being right every time. It's about finding situations where probability is in your favor. If you enter at 9:15, your probability is low. If you wait, observe, and enter between 9Z30 and 130 when structure is clear, your probability increases significantly. Entry means choosing a point where risk is low and potential reward is high, and that only happens when you wait for clarity. Many traders lose not because their strategy is wrong, but because they use the right strategy at the wrong time. Here, psychology plays the biggest role. When price moves, the mind screams, "Hurry or you'll miss it." This fear of missing out is your biggest enemy. Mark Douglas said every trade is a unique outcome. Stop searching for certainty. Trust probability. When the market gives a clean signal, there will be evidence of stability, volume, and momentum. The best entry time is when noise is gone and structure is complete. In intraday trading, not every hour is the same. The most productive times are usually 90-30-20-30, and again from 1:30-30-20-30. After 3-oded, volatility often increases again as positions are closed, making it risky for beginners. Knowing the right time is helpful, but discipline matters more. Mark Douglas said the market doesn't create your emotions, it reveals them. If you control your discipline, stick to your chosen time windows, and focus on process over outcome, consistency follows. Trading success doesn't mean winning every trade. It means being ready when probability is on your side. You cannot control the market, but you can control your decisions and your timing. And that control is what separates consistent traders from the crowd. So the next time the market opens and you sit in front of the screen, ask yourself one question: am I waiting for the right time, or am I reacting to my emotions? Trading is not about catching every move. It's about catching the right move at the right time. I remember the first time I sat in front of the charts thinking this time would be different. I had indicators everywhere, lines crossing lines, colors flashing like they were trying to shout answers at me. I believed that if I just worked harder, learned more setups, added one more strategy, the market would finally reward me. That belief almost broke me, because nobody tells you this at the start, but trading does not punish laziness, it punishes confusion. And confusion comes from chasing too many ideas at once. I used to think successful traders were smarter than me, that they saw something I couldn't see. But over time, after enough losses that hurt more emotionally than financially, I realized something uncomfortable. Most of my losses did not come from bad markets. They came from me not knowing who I was in the market. Every trade felt like a new personality. One trade I was a scalper, the next I was a swing trader. The next I was suddenly a long-term investor because price moved against me. That's not trading. That's identity crisis with money on the line. Building one trading strategy is not about finding the perfect system. It's about choosing who you are going to be when uncertainty shows up. The market will test you every day. It will invite you to abandon your rules with promises of quick profit and threats of missed opportunity. If you don't have one clear strategy, you will accept every invitation. And every invitation costs money. There was a point where I finally got tired. Not tired of losing money, but tired of losing trust in myself. That's a deeper pain. When you can't trust your own decisions, every chart becomes threatening. Every candle feels personal. That's when I understood why sticking to one strategy matters more than how profitable that strategy looks on paper. Consistency is not born from good entries. It's born from knowing exactly what you will do before the market asks the question. I stripped everything down. No fancy indicators. No 5 different time frames telling 5 different stories. I asked myself one simple question: what setup makes sense to me, not emotionally, but logically? Something I could explain to another person without sounding confused. Something with clear conditions for entry, clear rules for exit, and most importantly, clear rules for staying out. Because most damage in trading doesn't happen when you're in a trade. It happens when you should not be in one. The first weeks were uncomfortable. Sticking to one strategy feels boring at first. Your mind craves excitement, variety, action. Boredom makes you question if you're doing enough. But boredom in trading is not a warning sign. It's a signal that you are no longer gambling. The market doesn't reward excitement. It rewards patience disguised as discipline. I remember watching price move without me. Opportunities I would have jumped into before, I now let pass because they didn't fit my rules. That hurt at first. Missing out always hurts more than losing because it attacks the ego. But slowly something shifted. I stopped feeling late. I stopped feeling rushed. The market no longer felt like it was running away from me. It felt like it was waiting. When you stick to one strategy long enough, you start seeing the market differently. Patterns don't look magical anymore. They look repetitive. You begin to recognize when your setup has an edge and when it doesn't. That awareness does not come from reading books. It comes from repetition. And repetition only works when the variables stay the same. Every time you change your strategy, you reset your learning curve to zero. There's a lie many traders believe. That flexibility is strength. In trading, flexibility without structure is weakness. It gives fear permission to disguise itself as adaptation. Every time you break your rules, you tell your subconscious that rules are optional. And once rules are optional, emotions take control. Fear enters first, greed follows, and discipline leaves quietly. Sticking to one strategy teaches you something deeper than market behavior. It teaches you self-respect. You begin to see that your job is not to predict the market. Your job is to execute your plan. Outcomes stop defining you. A losing trade doesn't feel like failure anymore. It feels like the cost of doing business correctly. That shift alone saves most traders years of pain. I've seen traders with simple strategies outperform brilliant minds with complex systems. Not because the strategy was better, but because it was followed. Consistency compounds quietly. You don't notice it day to day. But over months, it changes everything. Your confidence stabilizes. Your risk management improves. Your emotional reactions soften. You stop trying to prove yourself to the market. At some point, you realize the market was never the enemy. Your lack of commitment was. Commitment to one strategy is not about stubbornness. It's about giving yourself enough time to see the truth. No strategy works all the time, but every strategy reveals its edge if you stay with it long enough. Jumping from system to system only proves one thing. You never stayed long enough to learn. The hardest part is not building the strategy. The hardest part is trusting it when the last trade lost, or the last three lost. That's where most people quit, right before consistency begins. Professionals don't win because they avoid losses. They win because they don't change who they are after a loss. When you finally stick to one strategy through wins and losses, something powerful happens. You stop feeling emotional urgency. You stop revenge trading. You stop forcing trades. You start waiting. And waiting is where most money is made. Not in action, but in restraint. Trading then becomes simple, not easy, but simple. You know your conditions. You know your risk. You know when to walk away. The noise fades. The market becomes neutral. And in that neutrality, you perform at your best. If there is one lesson I wish I had learned earlier, it's this: the market does not reward intelligence. It rewards discipline. And discipline only grows when you choose one path and walk it long enough to understand where it leads. This is not about perfection. It's about commitment. Build one trading strategy. Respect it. Execute it. Let time do the rest. There comes a moment in every trader's life when they finally realize the market is not confusing anymore, but they are. The charts didn't suddenly change. The price didn't become evil. What changed was awareness. You start noticing how often you break your own rules, how quickly you abandon a plan after one loss, how easily fear talks you into calling it intuition. That realization hurts, because now you can't blame the market anymore. You have to face yourself. Most traders think the hardest part is finding a winning strategy. It's not. The hardest part is staying loyal to that strategy when it stops rewarding you immediately. Human beings are wired to seek instant feedback. Trading does not work that way. Trading rewards delayed consistency, and delayed rewards expose weak discipline faster than anything else in life. I remember a phase where my strategy was actually working statistically. The data was there over time, it made money. But emotionally, I couldn't handle the drawdowns. Every loss felt personal. Every losing streak made me question everything. That's when I understood something critical. A trading strategy is not just a set of rules. It is a mirror. It shows you exactly how much uncertainty you can tolerate without panicking. When you jump from strategy to strategy, you're not adapting. You're escaping discomfort. You're telling yourself a story that the problem is the system, not your patience. But the market sees through that instantly. It exposes inconsistency brutally. The trader who survives is not the one who avoids pain, but the one who learns to sit with it without changing behavior. Sticking to one strategy forces you to grow up emotionally. You can't hide behind new indicators anymore. You can't reset your confidence by switching systems. You either follow your plan or you don't. And that honesty is terrifying at first, because now results reflect discipline, not luck. There's a dangerous illusion in trading. The illusion that more effort equals better results. More screen time, more analysis, more trades. In reality, more effort without structure creates more mistakes. One clear strategy executed well beats 10 strategies executed emotionally. Always, when you commit to one system, you begin to notice patterns in yourself, not just the market. You see when you're tempted to enter early, when you want to move your stop, when you justify breaking rules because this one feels different. That awareness is priceless. That's where real edge comes from. Most people never get there because they quit too early. They confuse discomfort with danger. They think a losing week means the strategy is broken. In reality, it means variance is doing its job. Every profitable system is losing periods. The difference between amateurs and professionals is not that professionals don't feel doubt, it's that they don't obey it. At some point, sticking to one strategy changes how you see losses. A loss stops being a verdict on your intelligence. It becomes feedback, neutral, informational. You log it, you review it, you move on. That emotional neutrality is not talent. It's trained through repetition and restraint. And here's the part nobody likes to hear. Your strategy doesn't need to be exciting. It needs to be executable. Boring strategies make consistent money because they don't trigger emotional overreaction. Exciting strategies make traders feel alive while draining their accounts slowly. When you finally accept that your job is not to catch every move, something inside you relaxes. You stop chasing. You stop forcing trades to feel productive. You start respecting waiting as a skill. And waiting is the hardest skill to master because it gives your mind too much space to interfere. The market will always offer opportunities, always. Missing one means nothing. Missing discipline means everything. One strategy protects you from yourself. It creates boundaries. And boundaries are freedom in trading. Over time, you stop measuring success by daily profit. You measure it by execution quality. Did I follow my rules? Did I manage risk correctly? Did I stay out when conditions weren't right? Those questions build confidence faster than any winning streak. Eventually, something quiet but powerful happens. You stop hoping. Hope disappears from your trading, and that's a good thing. Hope is what gamblers rely on. Traders rely on process. When hope leaves, clarity enters. This is where most people finally understand Mark Douglas's core truth. The market is random in the short term. Your behavior must not be. One strategy gives you behavioral consistency in a probabilistic environment. That's the entire game. And once you experience that level of clarity, you can never go back to chaotic trading. You've seen the cost of inconsistency. You've felt the peace of alignment. You understand now that freedom in trading does not come from unlimited choices. It comes from commitment. There is a stage in trading that very few people ever reach, and it has nothing to do with money. It's the moment when you stop trying to be right. Most traders don't even realize how much of their behavior is driven by the need to prove something. To prove they're smart. To prove they belong in the market. To prove the last loss didn't define them. And that need quietly destroys consistency. When you build one strategy and truly stick to it, the need to be right starts to fade. You no longer enter trades to confirm your intelligence. You enter because conditions are present. That shift is subtle, but it changes everything. The market stops feeling like a judge and starts feeling like a neutral environment where you simply execute. Before that shift, every trade feels heavy. You watch every tick. You feel every pullback in your chest. You're emotionally invested in the outcome. After the shift, trades feel lighter. Not because you don't care, but because you've already accepted the risk. The outcome is no longer a surprise. It's one of many possible results you agreed to beforehand. This is where most traders get confused. They think emotional control comes from confidence. It doesn't. It comes from clarity. When you know exactly why you're in a trade and exactly when you'll be out, fear loses its voice. Fear thrives in ambiguity. One strategy removes ambiguity. I remember the first time I took a loss and didn't feel the urge to get it back immediately. That was the real milestone. Not a big win, not a streak, just a quiet acceptance. I closed the trade, logged it, and waited. No revenge, no overtrading, no emotional story attached. That's when I realized discipline isn't something you force. It emerges when the system is clear enough to trust. Most traders sabotage themselves because they want certainty in an uncertain environment. They search for confirmation everywhere. News, indicators, other traders' opinions. But certainty does not exist in markets. Probability does. One strategy trains your mind to think in probabilities instead of predictions, and that is a psychological upgrade most people never make. When you stick to one strategy long enough, you also learn something uncomfortable. You are the weakest part of the system. Not the rules, not the setup. Your impatience, your fear of missing out, your inability to sit still. That awareness can either break you or free you. Professionals let it free them. There is a strange peace that comes when you finally stop interfering with your trades. You place them. You manage them according to plan. You let them end. No drama, no internal debate. That peace doesn't come from winning. It comes from alignment between intention and action. You start seeing how little you actually need to trade well. A simple chart. A defined setup, controlled risk. Everything else was noise. The hours you spent searching for the perfect indicator were never about improvement. They were about avoiding responsibility. Because once you commit to one strategy, there's nowhere left to hide. Another truth reveals itself at this stage. Losing trades don't damage confidence anymore. Breaking rules does. You feel more upset about emotional mistakes than financial ones. That's growth. That's maturity. That's when trading starts shaping character, not just bank accounts. Sticking to one strategy also teaches humility. You accept that you don't control outcomes. You control behavior. That acceptance removes arrogance. You stop trying to outsmart the market. You stop arguing with price. You listen instead. And the market always speaks clearly when you're not emotionally loud. You also begin to respect time differently. You understand that edge unfolds over a series of trades, not a single one. You stop zooming in on short-term results. You zoom out mentally. That perspective protects you during drawdowns. You don't panic because you've seen this phase before. You've survived it before. You didn't change then, and you won't change now. This is why jumping systems resets traders back to emotional chaos. Every new strategy restarts doubt, restarts hope, restarts fear. Sticking with one allows emotional patterns to stabilize. And stability is the foundation of profitability. Eventually, you realize trading was never about making money fast. It was about learning how to behave consistently under pressure. Few environments test that like markets do. That's why most people fail. Not because they lack intelligence, but because they refuse to commit long enough to change internally. At this level, trading becomes simple but not easy. Simple rules, difficult discipline. But you no longer crave complexity, you crave clarity, and clarity comes from repetition, not innovation. You stop asking, is this strategy good? And start asking, did I follow it? That question alone separates amateurs from professionals, because the professional knows results take care of themselves when behavior is controlled. This is where confidence becomes quiet, no excitement, no rush, just calm execution. You trust your process not because it wins every time, but because you've seen it work over time when you stay out of its way. And once you reach this stage, you understand the truth most traders never accept. The real edge was never the strategy. The real edge was becoming the kind of person who can stick to one. At the final stage of this journey, something unexpected happens. You stop obsessing over becoming a successful trader, and instead you focus on becoming a consistent one. That shift seems small, but it's the difference between chasing an image and building a foundation. Success feels loud, consistency feels quiet, and the market rewards the quiet ones. By now, sticking to one strategy doesn't feel restrictive anymore. It feels protective. It shields you from emotional decisions, from impulsive trades, from the endless temptation to do more. You've learned that doing more usually means making less. Less trades, less noise, less interference. That's where stability lives. You also stop measuring days by profit and loss. Some days you don't trade at all, and you're okay with that, because you understand that not trading is also a position of discipline, a position of patience. The urge to always be in the market fades, because you no longer equate activity with progress. There's a calm confidence that grows when you know exactly what you're waiting for. You're not scanning charts desperately. You're not forcing opportunities. You're observing. And when your setup appears, there's no hesitation, no internal debate, just execution. That decisiveness is not aggression, it's clarity. At this point, losses don't shake you. Wins don't excite you excessively. Emotional extremes flatten out. And that emotional neutrality is one of the strongest advantages a trader can have. The market thrives on emotional overreaction. When you remove yours, you stop feeding it. You also gain something rare. Trust in yourself, not blind confidence, but earned trust. The kind that comes from keeping promises to yourself repeatedly. Every time you follow your rules, even when it hurts, you strengthen that trust. And once you trust yourself, trading becomes sustainable. Most people never experience this because they quit at the hardest moments. They leave right before understanding begins. They keep searching for something better, not realizing they already had enough. One strategy, one edge, one disciplined mind. That's all it ever took. You begin to see new traders differently. You recognize the same mistakes you once made. The impatience, the overanalysis, the constant switching. And you understand now that those behaviors are not flaws. They are stages. Stages most people never grow out of because growth requires discomfort. Sticking to one strategy teaches you to sit with discomfort without reacting. That skill doesn't stay in trading, it spills into life. Better decisions, better patience, better emotional control. Trading stops being just a way to make money. It becomes a training ground for character. You no longer need motivation videos. You don't need hype. You don't need constant reassurance. Your confidence is built on experience, not excitement. And that makes it durable, unshakable. At this level, the market feels almost simple. Not predictable, but understandable. You accept randomness without fighting it. You accept losses without resisting them. You accept wins without attaching your identity to them. That balance is rare. And it's powerful. When people ask what strategy you use, you don't rush to explain indicators or setups. You talk about rules, about risk, about patience. Because you know now that the mechanics matter less than the mindset executing them. The truth is trading never became easier. You became stronger, more grounded, more disciplined. You stopped trying to control outcomes and focused on controlling behavior. And behavior is the only thing you ever had control over. In the end, building one trading strategy and sticking to it was never about the market. It was about you. About learning to commit, to trust, to wait, to act without fear, to accept uncertainty without panic. And when you finally reach that place, you realize something profound. You were never chasing money, you were chasing peace, and discipline was the path that led you there. That's when trading stops feeling like a battle and starts feeling like alignment.